All right, hello everyone. Thank you for attending this podcast. Thank you for taking time out of your day to listen to our short, hopefully 25-minute video presentation. And the topic uh, is real estate investing recession-proof and inflation-proof? Well, let's go over that process. Again, my name is Seewing from the Real Estate Network, and my co-host is Maureen McCann from SpartanInvest.com. Welcome, Maureen.
Thank you, Seewing. What a pleasure.
Same here, likewise. So let me share the screen and let's get it started. Actually, no, the topic will be, I'm so sorry. The topic is the goose, the laid and golden egg. All right, real estate investing.
Ah,
okay.
The goose that laid the golden egg. All right.
Yep. Income property is the goose that lays the golden egg. What does that mean? Well, I'm glad you asked.
I have a suspicion I know what it is, but I want to see what you got.
Yep. So here's what it is. I mean, if you're into real estate investing for any amount of time, you've been hearing this definition quite often. You know, real estate investing is multiple streams of income, right? I mean, over the years, you know, multiple streams of income sounds really good. Sounds really good. And of course, you see the background streams, water of money stream coming to you. Multiple streams of income. Really, multiple streams of income is just one component of multiple streams. Let me tell you what I mean by that. In fact, let me enlarge my screen a little bit better. So really, Maureen and I strongly believe in this very, very important concept. Income rental property is the ideal investment. It's history's most powerful and proven multi-dimensional and tax-favored real estate asset class. So our definition, and should be your definition, of the goose that laid the golden eggs. Here are the golden eggs. The golden eggs is multiple eggs. The eggs are income, depreciation, equity growth, appreciation, and leverage. So Maureen, can you briefly go over what this acronym means?
I would be happy to. So the investment property is the ideal investment. And when you are looking at producing a bunch of golden eggs, right? How do you get one investment to produce multiple ways, multiple streams of earnings? So it really comes down to those 5 things. And I love what you said, because you said in the beginning, you're like, this is what we believe. We don't only believe it, Seewing, we know it, right? We know this. We have built our entire careers on this fundamental truth that goes back for centuries. It has not changed. It does not change, whether it's a recession or some other, unknown, unforeseen, global financial meltdown like in 2008 or a pandemic in 2020. Investors still put their investment capital in a goose rental property that produces multiple golden eggs, such as what you mentioned. So cash flow. Everybody wants multiple streams of income. Warren Buffett, to say this again, he's like, if you don't have multiple streams of income, you will work until the day you die. I don't think anybody comes onto this planet thinking, I'm going to work until the day I die. That sounds like a really good way to go about living. No, you want to design the life that you want, and you need another source of income other than what we earn from our day jobs, right? So rental property is tried and true, proven to produce many golden eggs, from cash flow to capital appreciation or equity growth. Through the use of leverage, we've got the loan pay down benefit, which is like, it's the principal pay down that the resident is paying down for us. And it's like putting money into our accounts every single year, right? Because that principal is coming back to us in the form of the loan is the debt service is being paid down. And then you have the depreciation piece, which is the tax benefit of being able to depreciate the asset every year for 27 and a half years. That's a significant savings on your tax record. And then you can also deduct the mortgage interest on the loan. So there's multiple golden eggs that come from just owning one single rental property.
Yep, I absolutely agree. And so the remaining time that we have on this short presentation is that all I have to do, once you take action and buy at least one rental property, you are on your way to become 1% of the US population that will control 90% of the nation's wealth. That's how powerful real estate is. And let me show you a proof of how powerful real estate is. For those people that bought a primary home, even in the past 2 years, for those investors, Maureen, your investors that purchase in your market in Alabama and Tennessee and what have you, have done tremendously. Myself as well, my company, we help people buy in Central Texas in the past for many years, especially in the past few years, Austin, Texas, San Antonio, Central Florida, Southwest Florida, North Carolina, Raleigh, and one Midwest market in Buffalo. So look at this. Look at this. The U.S. home ownership had equity of over 27 trillion with a T. I don't even know how many zeros that is. I lost count. Right?
I don't know either.
And the value of a housing stock is like 39 million. So for those investors and primary home buyers that bought in the past 3 years during the pandemic, you have made a killing. I mean, you have made a windfall. So for those of you waiting in the sideline, they did not do it. Well, hopefully that's a motivation for you to finally to become a real estate investor and start taking action. Now, so again, we've been working with many investors, you and I, Maureen, and it's just very sad to see that most people are scared to take action. But if they look at history, if people take a look at history, real estate over time have increased consistently over the past, since 1945, ever since we've been tracking the record. We're talking like more than 75 years. If you could see the trend, real estate prices have gone up consistently with one exception, the 2008 housing crash. That's it, So what is the fear about it? If you invest for the long term, stay the course, you will reap your benefits. Now, one more thing. I know this with time is very limited. I mean, everybody, not just us, but people out there listening, because you guys are so busy with your life and all that. But I'm using one example of a property that the Maureen has, this new construction property, a single family home in Alabama, for a mere $230,000. Now, this is a high value add property. We're not going to spend time to talk about it. I mean, to buy this rental property, cash flow property for such a very good cost of $230,000, that's amazing. So we can use this as a template to go over why buying this type of cookie cutter single family home residential investing space is an ideal way to scale your real estate portfolio by one property at a time and over the years, and then you'll be fine. And then another rule that you need to understand is the rule of 72. 72 means is the magic of compound interest. Albert Einstein said, the rule of the magic of compound interest is the eighth wonder of the world. The great Albert Einstein, he said that few hundred years ago. So numerically, it's a very, very simple concept, Maureen. 72 divided by the interest rate, which is the appreciation rate for rental property, equals the years to double your money. So if you're getting a 12% return, the appreciation rate, which is kind of unrealistic, the value of your property will double in 6 years. But let's use a conservative appreciation rate using the rule 72. Let's use 6%. So 6% annual appreciation rate divided into 72 equals in 12 years, your property will double in value. And then if you continue to invest in, continue to have that same asset for another 12 years, your asset will accelerate 10x. Let me prove you the point. The point is using the same property that we use in Alabama, $230,000. You buy today at $230,000 at only 5% appreciation annually, right? 72 divided by 5. So this $230,000 property in about a mere 14 years, it'll double to 460. Then if you continue to own this rental property for another 14 years, which is in 28 years, the 460 will become 920 in 28 years. And by that time,
you know who knows this concept really well, Seewing, is, and it was splashed all over the headlines of Goldman Sachs buying $45 million worth of single family homes. They bought an entire community. $45 million was their investment because they recognized that, we talked about before, the goose that lays the golden eggs. This is just one aspect of it that you're sharing here on the rule of 72. And Goldman Sachs doesn't do things because they want to lose money. They do things because they recognize the opportunity on where they can build their capital, build their wealth building strategy is owning single families. It really was an uproar in a lot of the residents in this particular community in Florida. They were very unhappy about this, but it just goes to show you, this is for, us folks, us, little folks over here that are building our portfolios one rental property at a time. $45 million too, I would go buy as many single families as I could as well. So I love the rule because it does show that owning a hard asset, tends to be recession resistant. There was only one time that it showed that it wasn't recession resistant, and that was due to the subprime lending debacle in the global financial meltdown in 2008. Like, I think all of us lived through that. And think about this, if you were an investor at that time in 2008 and you had capital sitting on the side and you were able to buy properties for cents on the dollar because the banks had to get rid of them as quickly as possible, and you did that back in 2008, you know what the benefit of buying single families, holding on to them, increasing the rent over that fixed period of time, over that fixed mortgage payment, what it has done for you as an investor. And this is the message that Seewing and I are so passionate about and so trying to get, in here. We've said it so many times. I mean, I know we've done so many podcasts and we keep saying the same thing over and over again, but it's like we have to hear, the human mind has to hear the same thing now 22 times because of how quick the hits are from social media and all the information that's being hit at us are thrown at us. We have to hear the same thing over and over again. And so this is such a powerful message and such a strong takeaway that if you really want financial freedom, if you really want security and you want cash flow coming in for years to come for you, your family, and generations thereafter you, then this is a strategy that is by far tried and true, proven for centuries that this works. And this is why we're so passionate, because we want to get the message through, because if you do it, then you get the result that many investors have prior to you, knowing that this is the investment class that is proven to build your wealth and your nest egg.
Absolutely well said. There's nothing else that I need to add. Very good point. So it resonates with me and everyone else for that matter. So thank you. You are inspirational. You're a leader. You're a amazing person. So with that said, thank you so much. This is Seewing Yi from the University Network and Maureen McCann from Spartan Invest. Thank you for attending. Have a nice day. Bye-bye.
Bye.